Did you know that a single number can send shockwaves through the global economy? That number is the Dow Jones Industrial Average. Whether you're an investor, a beginner, or just someone curious about how stock markets work, understanding the Dow Jones can change the way you see the financial world. But how does it really work? And why do experts watch it so closely? Stick around because in the next few minutes, we'll break it all down in simple terms. What is the Dow Jones? The Dow Jones Industrial Average, often called simply the Dow, is one of the most well-known stock market indexes in the world. Created in 1896 by Charles Dow, it tracks the performance of 30 major publicly traded companies in the United States. These companies span various industries, including technology, finance, healthcare, and consumer goods. Think of the Dow as a thermometer for the stock market. It helps investors gauge whether the overall market is doing well or facing trouble. When the Dow goes up, it often signals economic growth. When it drops, it could indicate market uncertainty. How does the Dow work? Unlike some stock indexes that weigh companies based on market value, the Dow uses a price-weighted system. This means that companies with higher stock prices have a greater impact on the index, even if they're not the largest companies by market capitalization. For example, if a company with a stock price of $500 makes a small move, it affects the Dow more than a company with a $50 stock price. This unique calculation method makes the Dow different from indexes like the S&P 500, which weights companies by total market value. Why does the Dow matter? The Dow Jones is more than just a number on a screen. It reflects investor confidence and economic stability. Here's why it's important. Market indicator. Investors, economists, and policymakers use the Dow to assess the market's overall health. Investor sentiment. If the Dow is rising, it often means investors feel optimistic about the economy. A falling Dow could signal fear or recession concerns. Historical trends. The Dow has seen major crashes, such as the 1929 Great Depression and the 2008 financial crisis, but it has always recovered over time. Should you invest in Dow Jones stocks? Since the Dow consists of 30 blue-chip companies, it's often seen as a safer investment choice. Many people invest in Dow stocks through exchange-traded funds, ETFs, which allow investors to own shares in all 30 companies rather than picking individual stocks. However, investing in the Dow isn't without risks. Since it only represents 30 companies, it might not provide as much diversity as broader indexes like the Nasdaq or the S&P 500. That's why many investors use the Dow alongside other market indicators when making decisions. The Dow Jones is a powerful tool for understanding the stock market. Whether you're an investor or just an observer, keeping an eye on the Dow can help you stay informed about market trends